Hello, everyone, and welcome to today's webinar at Tax Benefits Unlocked, Qualifying as a Real Estate Professional. My name is Catherine Bazley, and I am a tax partner at Cherry Bekaert. In today's webinar, we are going to discuss the IRS definition of a real estate professional, and lest you feel like you've been led a little bit astray, yes, we'll talk about some of the tax benefits and how they're unlocked, but most importantly, we'll be talking about how to ensure that you really are a real estate professional, what it takes for the qualification, and educate you on some of the documentation requirements and pitfalls that some unfortunate taxpayers have faced. And I am pleased to introduce our other speaker for today, Andrew Gradman.
Hi, this is Andrew Gradman, Law Office of Andrew Gradman in Los Angeles. This is my fourth presentation, I think, with Kat, and we have a fun time together. That's my introduction. Let's dive into it.
One thing before we get started, just real quick, for those of you that have not experienced the Andrew Cat duo, Eunice has put the outline in the chat. We will put up a general presentation, but we don't read from slides. We don't follow a strict outline. We are very conversational. We may veer a little off track. We may have time for questions, not sure, but this is really meant to be very informative and educational for all of you. Okay, let me pull up just the kind of general slide deck.
And while you do that, I thought it would be good to start with some sort of thematic background things, even just before we get into the rules. And each of us is going to maybe have our own philosophical feelings, and so maybe we're going to discover some disagreements or agreements. Let me tell you my experience. I am the son of a doctor, and I am the grandson of a doctor. And these rules were meant to stop doctors from taking advantage. And I know why. Because doctors are smarter than everybody. Because they save so many lives, it just follows that the tax law should also bend to their will. And if the lady or gentleman who's working in the operating room alongside of them is a real estate professional, then clearly they should be too. And I don't mean to suggest that this kind of attitude is true of every one of you or every person, but it appears often enough in my practice that I feel that this is one kind of conversation that I have with a client. And so the client may come in and say, I'm a real estate professional. And I'll say, how do you know? I say, I work 750 hours in the matter, in this. And so the first thing is, if that's the conversation we're having, I don't know what benefit I'm going to provide, except to maybe challenge your assumptions. Because as you're going to learn today, it's A, the rules are quite complicated. And B, and this is subtle, and this is something I want to really, even when you understand the rules, a lot of where people fail is in proving that they've satisfied the rules in a confrontational setting, whether with the IRS, with the courts. At the end of, so we're going to refer to a handout, and at the end of that handout, you'll see I've gathered a list of about 35 cases that are from the last 10 years. These are not like new law being made cases. These are just examples. And while I don't believe there's any statistical significance to how they were selected, they are virtually all cases in which the taxpayer loses. And they're virtually all cases in which the taxpayer loses because the evidence they present in the court says this isn't good evidence, which is sad because all those people, until the judge said that, thought they were real estate professionals. And then the judge says, I'm going to impose penalties because you don't have reasonable cause, because the only thing you did was you hired a tax preparer and told that person that you were a real estate professional. You didn't ask him to challenge you. And so I like to be the bad cop, and apologies if that comes across, but I just want people to appreciate this isn't all gold at the end of rainbows here. We're trying to protect you from hurting yourself. So go ahead, Kat. What are your thoughts on this?
Well, no, I completely agree. And I would actually say that so much of what we do when we're facing the IRS is about optics. I mean, and a lot, the person that will take me, for example. I literally, as a CPA, I track my time for a living. I charge clients based on hours worked, minutes worked. And then if I were to come into the IRS and say, well, I'm also a real estate professional, does that optically, big picture, does that make sense? Does it make sense that I've tracked my hours and I have, 3,000 hours a year as a CPA, and now I have 750 hours or more? 750 is your minimum, as a real estate professional on top of being a mom. And, you know, so just let's start with the big picture and, does this make sense? Is this something that a reasonable person would look at and say, oh, well, yeah, you can clearly do all of that. You can't have, 5,000 hours a year, unlike the rest of humanity. I mean, it's kind of, let's start with some of the big picture, break it down to simplistic things. Like, start with, does this even make sense? Does this, and I mean, we're going to get into much deeper information now, but that's kind of where we are.
Reminds me of the joke in my family, the protagonist is Cohen, but I guess in different cultures it's a different person. He gets to heaven and there's a big parade and they say, "Congratulations, sir, you." And then, "Why are you celebrating me so specially?" He says, "You lived longer than anyone in history, longer than Methuselah." And the man said, "No, that's not true. I died at the age of 75. But sir, according to your billable hours." And it's just kind of anyway. So we, as all professions, I think, struggle with this. And I'll just in the handout, page 3 of 10, which 40% of you are going to be like, "Where's the handout?" It's supposed to be in the chat. It'll be on my website after this presentation. I'm going to
And
upload
it
it.
looks like this. I just shared a snippet on the screen. It
Yeah.
looks like this. We recognize there's a lot of words. We don't intend for you to be, I'm sorry for cutting you off, Andrew. We don't intend for you to be following along on anything here, but that's why we have it in the chat. If you want to just make some notes directly in it, as Andrew referenced, he will refer to, okay, page 3, and,
Yeah.
and we'll have it on the screen. But again, there's a lot of words. It won't be something that's easy to read. It's more for support, subsequent to this webinar.
So I'm jumping out of order as we are wont to do when we present together, but I'm referring you everyone to page 3 of 10. I'm going to read this out loud. Some quotes from the tax court on the subject of material participation. The tax court has said, quote, "A taxpayer may establish his or her active participation in a rental real estate activity using, quote, any reasonable means." So far, so good. Then here's a quote you will see in virtually every case. "More than a non-contemporaneous ballpark guesstimate is required. And we, the court, need not accept non-contemporaneous logs and self-serving testimony regarding hours worked when uncorroborated by underlying records." Before I even continue, that principle is simple but fundamental to. And I used to be a prosecutor years ago, and it was my job to be planning the case I would bring in court. And believe me, I was an entry level guy doing like jaywalking, so it's not like I was putting mobsters in prison. But the guy down the hall from me was putting mobsters in prison, and what he taught me was like, you've got a lot of evidence which is self-serving, or a lot of, you get some guy to flip. Of course, the jury can be told he's trying to save his skin, yada yada. But corroboration is this magical power by which independently flawed pieces of evidence come together and support one another and become something you can trust. And so I think, I say this because there are some clients out there who just make a little piece of paper and can we jump to that case at the end now,
Yeah,
if you don't mind?
that's what I was just thinking about. Yes,
Okay.
yes.
So good. You have screen to share. So of the cases that are provided, we've excerpted one of them in its entirety. It's called Hairston from 2019. I remember when it came out, and I loved this, and Kat loves this case. Do you want to describe your favorite parts, or yeah?
Well, first of all, even Judge Lauber, I mean, I got stuck at the judge, but I think I'm trying to remember what I emailed you about. I can't even remember what words I used. It
I totally know. I think it's
was further along.
page 10 of 10, the end of the third bullet. And all of these bullets are talking about what the judge calls an inflationary pattern. We find that the hours recorded on the calendars lack credibility for several reasons. Here's some. I'm going to go through some. Every
Mhm.
task recorded on the calendars, no matter how trivial, is listed as having taken at least 1 hour to complete. Of the
Mhm.
360 recorded entries, a third record tasks that consumed exactly 1 hour. These include 36 for doing nothing more than receiving a rent payment, issuing a receipt for a payment, or depositing a check at a bank. Then I'm going to skip down. A similar inflationary pattern emerges from the accounting for snow removal, which allegedly consumed 93 between 93 and 105 hours during 2014. To begin with, petitioners have no obligation to undertake snow removal under the lease they've drafted. Um, and then here
And
we
it was for
have,
the driveway to their garage, not the tenant's garage, you know?
yeah, yeah. Um, we infer that most of the time spent clearing snow from that driveway was for petitioner's own benefit. And then here's your favorite part.
Oh,
An
yes.
inflationary pattern also emerges from the calendar entries recording time supervising contractors. Mr. Hairston recorded many hours during which he allegedly watched contractors work, including 33 hours while they installed and cleaned carpet. During 1 week in December, he recorded another 40 hours supervising contractors who were painting the interior of 6330 Bell. We understand that Mr. Hairston, having recently retired, had time on his hands, but we cannot believe that he spent an entire week watching paint dry.
Yeah, that was my favorite part. Um, and I think this is probably the most common place people will kind of go afoul of the rules. Maybe they have a calendar where they're like, oh, yep, rent, and they could retroactively recreate their time and their log. But this right here is so important, audience. Like, I cannot emphasize enough how important it is. They're calling this taxpayer out saying, okay, you collected rent and wrote a receipt. That does not take an hour. Or how convenient that so many of these things took exactly an hour. I mean, it's kind of like when somebody brings me all of their expenses for their business and everything is a nice round number. Come on, come on. This doesn't pass the smell test, and I mean, something like this, that's where I think this is where people can really get themselves in trouble is they aren't keeping track of what they're doing in real time. They're trying to recreate things maybe when they're working with their tax professional or worst case when they're being audited and having to defend the status that's been taken or the related deductions. And now they're going back and saying, oh yeah, okay, on the first of every month I collected the rent and I deposited it. Okay, there's an hour. So that's 12 hours for the year, and kind of nickel and diming and patchwork quilting the hours together. And I think, although, as the tax preparer, I don't say, give me your log. I say, here are the tests that are required. Do you meet this? And people say, yes, it is their responsibility. We are basing our work on the information provided by the clients. So hopefully, they do have substantial records to support this, but this is a big deal, guys.
I'm glad you just made that comment about your obligations as a tax preparer, because I was also going to ask on those lines. I've never prepared a return, and so, in the jargon that we tax professionals use is like our circular 230 obligations,
Mhm.
which is our obligations. I don't think we owe these to clients. We owe these to Treasury, and it's sort of like we should minimum standards we should meet, or else we get in trouble. And that's
Mhm.
often how I think. I mean, obviously, I also don't want you to sue me, but I mean, thinking in terms of what I can help you get away with.
Yes.
And I was going to ask you, and you touched on it, like someone walks in the door, how would you characterize the threshold for for when you might say no to a person who's insisting? I mean, if they just say, I'm a real estate professional, I meet these tests, is it fine? You say, look,
If
that's your
I
soul?
can't get comfortable that what they're saying is truthful, well, let's ignore the truth piece because I don't want to work with somebody that's not telling me the truth because we're just going to get into a whole other mess. But if if they're saying I'm a real estate professional and let's say it's a married couple, both spouses work, especially in an area where you track hours for a living, a service field, and it doesn't make sense. And what they're saying to me, it doesn't make sense. I'll say, I can't sign this return because I am signing that return under penalties of perjury, and I'm sure, whoever might do that, they may be lovely people, but I'm not risking my license, and our firm for, somebody saying, no, but I swear I'm a real estate professional. No, I need something like maybe have they given me a log of income and expenses, or they're saying, yeah, I went out to this site 17 times. Here's what I've been trying to do, or I'm doing the repairs myself. I know somebody, I was speaking to somebody recently that works full time as a CPA. Her spouse has a full time job. They have rent. They've recently purchased attractive rental properties, they're doing the work themselves. They're literally tracking the hours and, replacing, the drywall and painting. That I'm okay with, because they've already described a lot without seeing a log. They're describing very labor intensive, time heavy activity. So I feel comfortable with that. Whereas somebody that, a married couple that, especially, that have kids or have parents they're taking care of, some other obligations in life, where are they finding the time,
Hmm.
to do all of this intensive work?
Let's go to 2 of 10 and give people an overview of what the rules are. Um, and so let's have this in the context of what the general concept is. If you crack open Section 469, you're going to learn the following: that an activity can be passive if either of two things is true. One is failure to materially participate in the activity. If you fail to materially participate, we don't care if it's real property, we don't care if it's rental, that will kill you.
And
Um,
not even just in the scope of real estate, any activity. If you're investing in, a yogurt shop, same thing. If you're not participating, and we'll get into a little bit more specifics, but it's not just real estate where you have to meet certain levels of participation. Real estate just has a higher standard.
that's right. That's right. So, and we will describe the 7 tests for material participation, but before we do, just so you see, here's where we get the concept of real estate professional. There's so another way you can fail to be active, excuse me, another way you can be passive is if, generally speaking, any rental activity is passive.
Yes.
And there's deep buried in this document, you'll see the definition of a rental activity, and you can get out of it in various ways. I don't think Avis Rent-A-Car is engaged in a rental activity because of the brevity of their leases, and you've taught me about there's a lot of service-related things. So just so we're
Mhm.
clear, that's the question. But then, even if you've got this rental activity, if it is a real estate rental activity and you are a real estate professional, you get off of that prong. To be clear, you
Yep.
still have to have materially participated. And it's really
Yes.
valuable to say that, because when I get an emails from someone, they say, "Can you document for me whether I've material participated when I'm a real estate professional?" And if I get back to them and say, "Oh, you are a real estate professional," they still may not have materially participated. And so they
Yes.
haven't, I've asked the question as they've asked it, but they really need to answer both questions.
And
Um,
one thing that I think is really important here is, let's say you meet the test, you are a real estate professional, you have these activities in which you materially participate in your real estate professional. You can also invest in real estate and not be a real estate professional. So you can have a portfolio where some things you are actively participating and some things you are passive. I think sometimes people think it's all or nothing based on questions that I get. That is not the case. And we'll get a little bit more into that. But I
yeah.
just wanted to highlight that because that is something that comes up a lot.
So now I'm going to suggest we jump down to the definition of real estate professional, because
Yep.
and see where the rabble is
Where
headed.
is it? Let's see.
And
Here,
that will be on
define
page
below.
4 of 10, step 4.
Here we
So,
go.
in the body of this document, we explore each of the tests just described, but now we fall in this scenario where it's rental, but how do you get out of it? So you get out of it, and the activity, if you materially participated, then the activity will be non-passive if it's a real property trade or business, and the person devoted to real property trades or businesses in which he materially participated more than 750 hours and more than 50% of his services.
Mhm.
All right, so that is the test.
Mhm.
And some of these definitions are worth elaborating upon. So, real property trades or businesses means, see footnote 14 there, any real property development, redevelopment, construction, reconstruction, acquisition, conversion, rental, operation, management, leasing, or brokerage trade or business. I've had a client who loans money to builders. It's not real property trade or business.
Mhm. They'll make the argument though.
Yeah, sure. Yeah, he did. But what's interesting is that it is worth pointing out that these activities are not all, excuse me, are not all rental activities.
Correct.
So although you're doing this to cause your rental property to not be passive, in deciding whether you're a real estate professional, you can include the non-rental activities.
Yes. Yes. And that's where you will see, in my experience, a lot of real estate developers, maybe in construction, they're building, they're developing projects. They may not necessarily be holding on to them and looking for the rental treatment in their day to day, but they may have other activities. So that's where I've seen a lot of that, and where it's important to understand these other aspects of what a real property trader business is.
Yeah. Two other aspects that are defined on the slide or on this page well, for the term services, what you if you want to include your services in your capacity as an employee, you must own at least 5% of the business in which you're serving as an employee.
Hmm.
Um, so if you're moonlighting and by your day job you're in construction or whatever, it's not going to count unless you happen to own 5% of that company.
Yes.
And then also, there's an interesting aspect for the spousal attribution because it's different in different places in this rule. On the page that you're looking at, when we're testing spousal attribution for real estate professional status, you don't do, let's see what this slide says. You don't include services performed by your spouse. And I want to point this out because for a different test on this page, way earlier in the document, for material participation, you do include services performed by your spouse.
Hmm.
Um, and so it's complicated, and you just have to know that.
Yes. Yes. I mean, it seems like the IRS is kind of talking out of both sides of its mouth in places. So it's another example of somewhere where you can easily get tripped up thinking, okay, well, yeah, my spouse works at, you know, a construction company, I that time will not count in the services performed by taxpayer spouse. So
Yeah.
that is very important.
And I encourage people to go and read some of the cases that are included,
Yes.
because here we are describing these rules. People go to court, and the judge is explaining to people who went all the way to court that, oh, you didn't know that you can't do spousal attribution for, you can do it for material participation, but not this. Some those of you in the audience who are taking notes are like, I'll never make that mistake. Good. But do read those cases because you can see that people get very enthusiastic and seem to
Yes.
miss that.
Yes.
How about we talk about the 750 hours and the 50%?
Okay. That's up here, I
It's on the
believe.
same, it's on the same page. It's
Oh,
step 4, and it's in the, oh,
no, I thought it was further up.
you were on the right page before.
Oh,
You're
here?
thinking about 500 hours for material participation. I'm referring to 750. It's right in the middle of the screen. The
Oh,
second
up here,
at
right? No.
the bottom of the screen, there's exception. The activity will be non-passive if it is a real property trade or business and the taxpayer is a real estate professional. That is, he devoted to real property trades or businesses in which he materially participated more than 750 hours and more than 50% of his services. You see that sort of in the middle of the
Oh,
screen?
yes, yes, yes.
Perfect. Um, so I mean, at the risk of sort of similar to something that was just said, like you have to do these things.
Yes.
The more than 50% thing. Tell me what your experience is with these tests and what you think about
Well,
them.
that's another example of where, somebody has a full-time job or we'll just use me. Okay, so how am I spending my time? Am I spending is 50% of my services being spent on real estate? I mean, this is where I think people get a little bit confused. And I think the lines get very blurred because they're thinking of other tests, similar to the spousal material, attribution rules. And there's only so many hours in a day. I just keep coming back to that. I know I do, but where people think certain time can count, but it just doesn't.
Hmm.
And I
Yeah,
think it's
and
the easiest way to say it.
absolutely, and also from experience, people because we're asking that something be more than half your activities, it means that my inquiry is not limited to asking you about your real estate work. It's asking you about
Yes.
all your work. And I
Yes.
mean, imagine, I mean, I've never seen a case thinking about this. In theory, we see cases where people have logs of the real estate work. I don't see people marching into court with logs of their non-real estate work. But in
Correct.
principle, if you have a rule like this, you should be able to, if you're going to meet that test, you should be able to prove that you didn't, how much work you did in other areas.
Well, and kind of by contrast, if you are in a profession like me, like you, where we literally track our hours for a living, or you
Yeah.
work somewhere where there's a time card that says, how often you are there and on site, that can kind of prove that you're not 50% of your services aren't being spent on real estate.
Absolutely. And
So I think that's an important consideration.
yeah. So my last then takeaway is there's something profoundly unrealistic about these rules.
Hmm.
They require an amount of information that if I had to be holding the client's hand through all of it, it would be prohibitively expensive for me to
Yes.
do that.
Yes.
And for me to impress upon the client the importance of taking the kind of records that they need to be doing on their own is also chafes at common sense.
Yes.
And yet some, people do succeed on these tests. So it's
Oh,
just
yeah.
a matter
Yeah.
of getting away with it sometimes. So that is the definition of the real estate professional.
Hmm.
Um, I think I think when we have people who ask the question, we still then in these engagements go through the entire set of passive tests, and I think we should do
Yes.
that together now.
Yep. Page 2 it was, right?
Yeah,
Or
where do you want
3?
to start? So you start where you want. Material participation or activities or
Let's talk about the activities.
terrific. So your screen is there. Yeah, and this is an interesting concept. So this is the first step in an analysis. What are your
Hmm.
activities? I'm going to note that buried in here, the determination of what your activities are can be contingent on whether you're a real estate professional, which I haven't really figured out whether it's truly circular reasoning, where one could have come up with a case where your activities depend on your being a real estate professional and your real estate professional depend on your activities. I think it's a subtly different definition. I think real estate professional doesn't use the word activities, so they avoid that potential circularity. Um, yeah, they use trades or businesses.
Yes. Yes.
Uh,
Real estate trader business. Yep.
Yeah. And one thing to say that you'll see in experience and in the literature is that going into a project or into a client matter, there's no right way. There's no heuristic for what you should want to do at the activity
Hmm.
stage. Sometimes combining activities is better, and sometimes
Yep.
dividing them is better. You and I spoke about this the other day, and you came up with some I'd never thought of. You mentioned, I think, 469G, selling an activity,
Yep.
and that's
And,
pretty.
and so let's kind of go through the activities,
Okay, go ahead.
and why in the real estate world, oftentimes people get to meet the hours in the test by what's called grouping of activities.
Hmm.
And we'll touch on that a little bit, but defining the activities and being able to determine whether or not you can group them is very important. So I think we should kind of cover that and
Yeah.
what the different activities are and what constitutes similar activities versus not.
Okay, so on the screen, the little Romanettes 1 through 5 quote from the regulations for what determines what's an activity. It's just like much of the law, it just substitutes jargon until you get to the point where you feel like you've accomplished something. And here the final jargon is whether the activities constitute an appropriate economic unit.
Mhm.
And then it's followed by 5 different forms of common sense. Um, are they similar or are they different? Literally, I'm reading off the screen, people.
Yes, yes. Yep.
Common control, common ownership, geographic location, interdependence of the activities. I can't say anything more than I think it's just common sense.
Yes, yes. But
Um,
this does exist. So to the extent where we've had people try and say, well, no, these activities really all do go together, but maybe they don't have much common ownership, or geographically they're on opposite coasts, is there interdependency between them? Maybe do they share the accounting function amongst all of them? Do they share some kind of you have, again, it's kind of using some common sense. Well, okay, just starting with the basics. Does that pass the smell test? Does that make sense? Because oftentimes it doesn't when you look at it this way. And
mhm.
I'm pointing to my screen that nobody can see, but
Yeah, I
so
imagine. I mean, I'm thinking about other areas in law, tax law, like the
yep.
debt versus equity test, where it's just a
Yes.
million factors, you just do facts and circumstances, and I'm sure that at cocktail parties, tax professionals like to brag. I can take any two activities and make them either be one or split
We're
them.
a little more fun than that, but
American Bar Association, I'm referring
so,
to.
okay.
Um, and so, okay, but now we get into the exception, which you mentioned, that real estate professionals have this other thing that allows them to combine activities, and it is an election that if you're going to do it, you make it on your return,
Yep.
and it you're stuck with that election until you revoke the election by including on the return a statement that explains the material change in circumstances for why you're revoking it.
Yep.
I don't have experience for the IRS rejecting those revocations, and I'm sure they don't. But
I haven't, but it hasn't happened to me, but I have spoken with some partners where, they've taken over, the tax returns for a client that are subsequently audited, and they've been told a grouping election was in place, but then they can't find the documentation
ooh,
that a
see,
grouping
that's in
election
those
was in
cases.
place.
When I was reading through the cases, which are at the end, that happens for people. They, for whatever reason, they didn't make the election, and then there go
Mhm.
judges lecturing them. I'm like, can't you guys read the rule? It says you need to make an election. You don't just do it because you want to.
Or for a lot of people, and I think there might even be one person on this call, he moves very, very quickly. And is constantly adding on new projects. Okay, well, wait a minute. Let's make sure that if there's a grouping election in place, almost annually, you need to look and say, okay, well, what's changed? Do we have some new activities? Do we need to update that grouping election to include the new activities? Are there somewhere the facts and circumstances have changed and we need to pull them out of the group? But that is something that should be discussed.
And I want to say, and I think we owe it to the listeners to have introduced this with this comment. The main reason we care about the grouping is that in order to do material participation, which we have alluded to many times and we'll get to momentarily again, typically you're trying to get the most hours possible. Let's say you're doing the
Yep.
750 test. To meet that test, the more
Yes.
you group, the better.
Yes.
So for that particular purpose, grouping is good.
And that's why we're focusing on it here. I mean, and you're right. Maybe we should have just touched on that a little bit in the beginning. If you have not made the grouping election and you have 8 projects that you have spent 100 hours on, each of them, in total, if you're grouped, you've met that hourly test. If you haven't grouped, they're each looked at individually. So the grouping is almost always necessary, but you want to be mindful about how you're doing it and what your intent is.
Yeah, because getting material participation is like getting your foot in the door for even playing the game.
Yes.
So then you find yourself grouping, and then as we're going to discuss, so I just will elaborate on that example from earlier because it was so enlightening when you told me. So passive losses get suspended until you sell the activity. And then
Yes.
when you do sell the activity, any of those losses that are suspended will turn into active, and you can take them and you could use them against your doctor's income.
Yep. Your
And
interest and dividends. Yep.
and so in that case, you might want your activities not to be as big as possible, but to be as small as possible, so that every
Yes.
time you sell a little marble worth an activity, you get those suspended losses. So you can see a
Yes.
push and pull. At the beginning of it, getting your foot in the door, you want it big, and at the exit, you want it small.
Yes.
But also, yeah. So yeah, and I think also, well, okay, I'll just leave it at that. You can use your imagination. There are many other reasons why it goes both ways. Do you want to have a lot of passive, you know, you and okay. So I'm going to suggest we say a word about portfolio income. It's on the bottom of that page.
Yes.
I lost.
So this is something that comes up a lot. And so in kind of the IRS's world, there's, your, let's call it active income, which is your W-2 income, your day job, if you have a Schedule C, you're an entrepreneur, anything that, I get a K-1 from Cherry Bekaert, I'm a partner here. That's anything that's basically your day job or you might materially participate in. You have passive, which think about your investments. But when I say think about your investments more, think about investments, not the stock market, but think about investments where maybe you get a K-1 or, I mean, that's really the easiest thing to think about. You invested in the coffee shop down the street. it's your mailbox money. Then there's this third category called portfolio. And portfolio is very misunderstood. It's often thought to be interchangeable with passive, and that is not the case. Portfolio is your interest, your dividends, your capital gains from the sale of, publicly traded stock or anything that you might get on a brokerage statement. That is portfolio income. And that's kind of in its own bucket. And none of that will be treated as, anything that relates to these tests or rental properties. It's its own beast that we need to consider. And then even if you're trying to generate a bunch of losses from real estate activities, people think, well, I can just offset my portfolio income, but there are limitations, and you cannot offset that dollar for dollar. So it is important to understand kind of the three buckets of income in the IRS's eyes.
Yeah, it's really interesting. And for another one thing, it comes up in an example where I have a lot of opportunities on clients. You have a lot of opportunities on clients. And when the client says, okay, I deferred this gain by investing in an opportunity fund, and then when it comes due later, can I use my losses from the investment, the opportunity zone investment to set that off? To me,
Yep.
the number one question I ask at that moment is, well, let's make sure that I'd be curious to know whether the gain that you deferred was a portfolio.
Yep.
And if the loss from the activity that you're doing is passive, then that's to me when people get
Yep.
bad news.
Yep. That's that. Yeah. So 2026 for those in Opportunity Zone world, we'll do another presentation about that. But CPE polls. We're actually not doing CPE. We do have some polls just in general. Let me
Oh,
see.
watch this. People flood out of the room. I would like to say I'm sorry that for those of you who came here for CPE that you didn't know that till now. We owe it to you to tell you that. So
I
sorry.
don't think we advertised that it was CPE, but
Okay.
okay, polling question 1. How many real estate properties do you currently own? A, 1 to 2, B, 3 to 5, C, 6 to 10, D, more than 10.
Well, I guess I'll answer that question.
And for me, the answer is 0. But so
Okay. So we'll get more of those questions. So
yeah, I think there's 2 or 3 more.
so having discussed portfolio, I think material participation, there's some fun stuff we could talk about that on page 3 of 10 when you're ready.
Yes, I think this is important. I think
Yeah,
this is
so
very
we've alluded to
important.
many aspects of this, but now to perhaps do it systematically. You can see that there's 7 tests. Oh, thanks for the answer.
Over 20% of you have more than 10. That's awesome. I mean, we can definitely talk about it more, but let's get through. I don't know that we'll have time because we can chat and we could do this all day. You guys should see our planning sessions.
Uh-huh.
So okay, material participation, 7
So
tests.
yeah, so any of these 7 tests, the one that sort of the flagship test is more than 500 hours per year.
Yep.
And that's, you keep the log, and we've talked about the how fraught and perilous the log is.
Yes.
Then the next 2 are kind of alternative ways to do it just by plowing on through. One is substantially all. And you said something really interesting about solar credits. Do you want to say that again here? Or is that not something that you find interesting? Because I found it interesting.
No, I mean, I'm trying to remember which part of what I said.
Well, you were
Um,
saying that like because it's a cool hack that if you do substantially all the work in an activity, then it is non-passive. So
yes.
all you have to do is just exile everyone else from your activity and say, I'm going to do this all myself, and then you are guaranteed to be unless, by the way, unless you own it through a limited partnership, which we'll get into momentarily.
Right,
Don't
right.
don't do that. Um, and so I think what you were telling me is that like for people who want to get non-passive credits from solar, if they
Hmm.
could find a way to be the only person involved, then they get it.
Right. But if you're in a fund, I mean, if you're even if you're in a closely held partnership, you're going to have problems with that. I mean, your participation is substantially all of the participation in the activity, dropping down to number 3, your participation exceeds 100 hours and is not less than the participation of anyone else.
Mhm.
So I think if you have somebody, unless you have a single member LLC, I think these are very, very tricky and difficult to.
Yeah.
I don't know how you, because what if you and I were in a partnership and we're both trying to meet these tests? What are we just shoving the other one out of the way?
I
It
love
just
that.
doesn't.
And you have to meet your burden of proof. Say there's five people in the
Yes,
partnership. You have to show affirmatively
yes,
that the other four people worked less than you.
yes. So it's kind of like
Um,
the group projects, back in college and, how to grade yourself well, but then you have to put other people down. I mean, it's the same with hours. So it's tough. And I think people think it's a lot easier. Oh, I can meet my 100 hours. Yeah, you can meet your 100 hours, but does that exceed what the others are doing? And especially if you were to take in, yes, I can meet the 100 hours, but what if somebody else has all the decision-making authority? Does that constitute substantially all of the participation in the activity? I mean, I would, if it was me, nah, that
I'd
wouldn't
like to
pass the
ask
smell test.
you, because we've talked about this and I think we should share now. You and I have each seen promoted arrangements, perhaps in solar or other places, where the promoter will say, here's how we're going to get you, Mr. Investor, to not be passive. I'm going to
Yes.
introduce you to this company that's going to give you a webinar. And by the way, in the instance that I saw, I sort of spoke with the promoter on the phone, and he was like, you don't have to attend the classes. We'll mark your name on the attendance sheet. It's like, oh God. Um, don't do that. But for people who do that in good faith, what are your
Yes.
thoughts about those kind of strategies?
So I think again, you want the optics to look good. I think that you need to be careful that it is something, and you'll see here, um, participation does not include work done by an individual in his capacity as an investor in the activity, unless he's involved in the day-to-day management or operations. So I would look at it and this is where it gets a little blurry. Studying and reviewing financial reports, that's considered investor. But if you're the owner of a business, you will also be studying and reviewing financials. I would look at it as, is this something the owner of this business would be doing? For me, taking CPE classes, you know, some people would say, some webinars are, just from an investor standpoint, just getting educated. Whereas other people would look at it and say, that's my job. And I'm trying to learn, whatever I can to do my job to the best of my abilities. So I think it's, you have to look at it through the lens of, is this something like I get those reports from, which I don't know about you guys, I throw them out, but you get something from Morgan Stanley that says like, here's an update on this stock you hold. I don't even read it. I'm an investor, I don't even know what it is. But if it's something about, our firm or our business, and I'm looking at that, or a client's, and I'm diving into that, that's more of the owner mindset. And I think it is so important to differentiate between the owner mindset and the investor mindset. And
Yeah,
then, of course, substantiating it.
I think so I was going to say is I'm thinking about like suppose you're the CFO of the company working alongside the CEO, and it's a big company.
Mhm.
You're making M&A decisions. And
Yes.
you're making those M&A decisions based on looking at
Yes.
balance sheets, your
Yep.
balance sheet and their balance sheet.
And
So
looking at sites. You might go around and look at different sites. If you're, maybe, I don't know if the CFO would, but you're looking at, okay, I'm interested in these two different apartment buildings. You typically want to lay eyes on it and review, the rent rolls and, lease up activity, that kind of thing. I mean, that's something an owner would do, an investor maybe.
but it does maybe illuminate that this is a difficult line to draw
Yes, yes, absolutely.
because I mean that CFO is like the Hairstons didn't have such a CFO, by the
Right.
way, in the case we read, but in a
No,
larger
no, no.
company, like it is a function of the company to be looking for
Yes,
opportunities, but then the people down the vertical who are feeding up the bookkeeping up to him maybe doing that's like more investor like material. So it is kind of blurry, and I think it's business by business, facts and circumstance.
yes.
Um,
Yes. And
and
I think again, it's where am I wearing that owner hat? Where am I wearing that investor hat? And being cognizant of the two different roles, even within real estate.
yeah. Um, I want to be efficient and push through some other subjects,
Yep.
knowing, however, we have another poll to launch.
Okay. Yep.
Can we multitask? Can we just put this thing and keep talking?
Sure.
All
Okay.
right.
Here is the polling question. What types of real estate assets do you currently own? Single family residential, multifamily residential, or commercial properties?
Very nice. So,
Okay, and so the poll is up, so I'll pull back our slides, this is how we're kind of, I really highly encourage everyone to download this and keep this handy and refer back to it. And again, like Andrew mentioned at the beginning, read some of these cases. I
yeah,
think you will see where people really did try, they had the best intentions, and some of them, I mean, obviously not everyone, but they thought they had substantiated their positions
yeah,
sufficiently, and
yeah.
they didn't. So I do really encourage that.
So there's this question of the limited partnership ownership,
Yes.
which where can we download the doc? It's somewhere in the chat. It's been posted. So if you maybe
Yes.
scroll up, you'll see that the doc's been posted. And report back if you can't find it. Um, for an interest held as a limited partner, material participation can be demonstrated only by tests 1, 5, and 6 on the
Mhm.
list above. 1 is the 500-hour test, a flagship test. And then 5 is that you've met another test on the list for 5 out of 10 years. And the other is it's a personal activity, in which personal service activity, excuse me, in which you met another item in the list for 3 years. This is interesting, because okay, so let's talk about limited partnership. I believe when you look at the definition of that term, it is not asking, it's so funny that case that just got decided the other day in the employment
Yes.
context uses
Yes.
different words in the rule, so you can't just apply it. It's different.
Sorbonne, I believe is the case.
Sorabon,
Yep.
thank you. Here, I think it asks, are you limited as to liability? And are you not acting in the role of what would be analogous to a general partner? So an LLC owner can still be a limited partner, clearly,
Yes.
under this.
Yes. Yes.
Um,
So, but again, like, I think that's where you need to look at these tests and maybe start with, by default, is my investor hat on, and then prove why you're not. If you're getting your activity through a limited partnership interest.
yeah.
Okay. Let's see. Anything else we want to cover right here? The
Um,
ballpark guesstimate. Yeah.
yeah, I read that at the beginning, but I just want to emphasize how impressive it was to me that as I read about half of the cases that I posted at the end. Almost all of them include that quote. Uh,
Mm-hmm.
I used to be a clerk to a judge, and I know the temptation, how tempting it is to there's this blurbs that you use case after case, and the no ballpark guesstimate rule. I think that comes from a 2010 case called Moss, but who cares? They really want to drive that point home.
Mm-hmm. Do we want to get
Um,
into the next step?
yeah, rental activity.
Yep.
All right, you want to say some stuff first?
So I think in general, I think there can be a little bit of confusion, and where I'm seeing more recently questions about whether or not something is a rental activity are coming up more and more, especially as it relates to like Airbnbs and VRBOs. But remember, if it's rental, by default, it is passive. And that's kind of why this is coming up. If it's not rental, then it's an operating trader business and you have less stringent testing. But if it is rental, remember, automatically passive, and a rental is defined here as, it's tangible property held in connection with the activity of the customers. The exceptions are what I would think is most notable. The
Yeah, I'll
average
just
period of customer
apologize.
work does not exceed a week.
I'll
You
just
know.
apologize for rendering them in double negatives, which made sense to me at the time, but now everyone has to undo that. So what I think you're saying, okay, average period of customer use does not, if you meet all of these, then you get out of being a rental activity. Is that what it says? Or if you meet
Correct.
one,
And
okay,
if you meet one,
one
it
of
doesn't
them.
have to meet all of them.
So it's very
For
generous.
example, the average period of customer use does not exceed a week. Think about a hotel. The average use, I don't know statistics, maybe 2 nights. A hotel is not considered a rental activity. That is a trader business, and that's reported in a different place. You don't have, it's a different set of testing. Now, if the hotel operations have rented the building from another company, the owner of that building has a rental business, but the hotel operations are not a are not a rental activity.
Let me
Um,
let me ask you,
Go
if you
ahead.
have an Airbnb situation, and at the end of the year you review and you take the average of the rental periods, and it's less than a
Mhm.
week. Bam, non-passive or non-rental. Excuse me.
We struggle with that. I'm not going to lie. We struggle with that because where it gets tricky is, okay, let's say you have somebody that's rented for, I mean, if it's short-term rentals, fine. But what we're seeing more often is, people will set it up for a week or 2 week minimum rentals, and then they'll have long periods where it's blacked out for family use, or maybe it's in an area where it's not rented a lot. So that is something where your documents better the heck support that your customer use does not exceed a week. If you're trying to take that as an ordinary trader business rather than a rental.
Okay. And of course, even if you cause this to not be a rental, you still have to show material
Yes,
participation,
yes,
which is probably where
yes,
those clients
yes,
get unhappy outcomes.
yes, yes.
Um,
Um, so in another place that where we see this is, in a law firm owns the building that they operate in and they also lease it to some other people. What does that look like? We don't have time to get into all of that right now. And there's self-charged rent issues, but it definitely gets a little more nuanced than here's a single family residence. You lease it to someone, they sign a 1 year lease and you do that over and over again. That one is obviously clear cut. Some of the other situations, it's a little more fuzzy, is hazy is the best way.
and let me tying this in also with material participation, since in the Airbnb case, that's the sword that you fall on. Um, let's say you own the Airbnb and it's yours and it's all yours, and
Hmm.
you're thinking, I'm going to become material participation based on substantially all test, but you hire a gardener, you hire a cleaner.
Hmm.
It's those are people
You
are
hire a
employees.
property management company.
Oh, even that. I mean, that makes it even. But let me ask you this: what if it's just the gardener? I mean, when they say substantially all, they mean substantially all, right? You have to clean the toilets yourself, right?
Yeah, yeah. I mean, I think I mean, I think there's arguments to be made. I think that's where, yes, they say substantially all, but is the gardener, an hour a week, versus, you do the cleaning, you do the property management, you do, and I think you would have to look at it more holistically.
Okay, just so I'm clear, so I understand the rebuttal you're making is that the question is not, is the gardener and the janitor categorically not included? It's, is that little slice of work that they do not substantial?
Correct. Yes.
Okay,
Yes.
that's fair.
Yes. Because I don't think it's realistic that I mean, in most times, one person can't do all of that. Especially if if they've made a grouping election and they're managing 4 Airbnbs. Do they have time to be mowing 4 lawns across, different counties within one state, and then cleaning the 4 properties, especially if it's an Airbnb, you know, they're all turning on Saturdays. Realistically, can that get done? But, if they do a lot of the home repairs, like maybe, they fix the stopped up toilet, they fix the dings in the wall, that is great. But if they have to hire an HVAC person because they're not skilled in HVAC, I'm okay with that. Okay, let's
Okay.
launch another poll real quick. Um, Poll 3 is, have you explored, oh wait, let me see. I'm just going to read it to you guys and it'll pop up. Have you explored tax saving strategies like cost segregation studies or the 179D deduction for your properties? Yes, already implemented. No, I'd like to learn more, or not applicable. Okay, let's keep going because we are running very short on time.
Yeah. I'm going to say we've covered
I
the
think we
formal
have.
curriculum. Um,
Yes.
I mean, we can always tell war stories and shame people for being crooks, but I think I mean, oh, you know, I learned from you the other day when you told me in the rental
You make me
property
sound so
category.
smart. Thank you.
I always try to give credit where credit is due. Um, I don't. So you told me that in the rental category of providing substantial services, you've represented clients who are like assisted living. Is that right?
Yes, assisted living. Yes. So, and in that case, you're looking at it and, you think by default, oh, this is a rental activity because, they're literally paying for somewhere to live. But is it senior living where it's more like a multifamily, where they have to be 55 and up and there's group activities? Or is it more truly assisted living or even memory care where the the bulk of, let's say, the cost is really due to the services that are being provided, the medical, the self-care, memory care services, whatever it may be, there is a difference there. So that is something, that you want to look at. It gets very, very nuanced. Ask for help. I mean, that just be careful there.
Interesting.
So yeah, it's not as clear cut as the IRS likes to, broadly say, yes, you can do this. And one thing I would advise anybody that's listening, people often think, okay, I'm going to invest in this real estate and it's going to generate a lot of losses that'll offset my income. I cannot tell you how often I hear that. And that is the single most important reason why this is important. Because as you see, it is not, okay, I'm not going to just generate losses that are, what do I have to, the losses will be generated. Whether or not you can actually take them is a completely different story.
Mhm.
So I've seen, people get drawn into these investments because they hear, I'm going to be able to offset my loss or my income. That's going to save me X amount. Pause. Refer back to this.
And with all due respect to the cost segregation industry, and I say that because I know
Yep.
Cherry Bekaert must have that
Oh,
service,
yeah, we can do
there
it.
are competitors of them that are not as transparent about this idea. And
Yes.
they'll say, here's a cost seg, and you get all these losses on the front page, and then they have
Yes.
no obligation, I suppose, to tell you that you're not going
No,
to take
none.
any of them.
No. And I have seen that, and people are very, very disappointed that they've paid for a cost segregation up front. It's not wasted, but it is money that they've spent, and you factor in time value of money. Maybe that wasn't the best use of that money at that particular time. So, okay, I think we're going to start wrapping up because I think we have 2 minutes.
Okay, go
But
ahead.
final poll, would you be interested in continuing the conversation on today's topic? I think everybody can probably guess the answer. Andrew and I can talk about this all day, and our planning sessions often last forever. And we talk about a lot of different things that we find very, very entertaining and insightful. Um, but some other things that we would like to point out to you guys, and again, with me with the slide deck. Okay. Coming up, there's a lot of stuff that is coming up. Tax reform, obviously it's still in flux, but there has been some proposed legislation. It will be going to the Senate next week, but we do have an article very specifically about what you need to know about what is proposed for real estate and construction. You can go ahead and scan this now. It is not all inclusive. This is our review of what's out there, what's not there, what has been proposed, and what has specifically not been addressed. Please, I think that will be very insightful. We have a webinar that will be coming up about tax policy. Here is the QR code for that. It will be coming up next week. And then kind of following that, after the Senate meets and we get new updates, we will once again be pushing out kind of, here's super high level what we'll be doing, then a little bit more detailed a few more days after that, and then the more industry in-depth articles like the one that I just discussed will be maybe about a week later. It does take us a minute to get through that and provide useful information, but everyone should be aware, whatever planning you are doing, we're going down the path of this being some of the most comprehensive tax law change in a decade, or more. It's tough to make plans. It's tough to say this is exactly what we're going to do when right now things are in flux, and just nobody knows for sure what's going to happen. We're all doing the best we can with the information that we have, but it's the wild, wild west right now is probably the nicest way for me to say it. And then our final, navigating the R&D tax credit landscape. That doesn't apply to a lot of you. That does apply to maybe if there's some architects here, engineers, this is something that you may want to explore, even some construction companies, if they have some of their own techniques, you can look into this. And then we are basically just, let me get that out of the way. Andrew, anything else as we wrap up? Because I think we're now a minute over.
No,
Okay, if
keep it
there's
positive,
anything
man.
that you guys are interested in learning about, we clearly enjoy this. Let us know some subjects. We have some ideas of other things that we would like to do. We value your feedback and would be interested in hearing what you have to say. And recordings will be available in about a week. So thank you very, very much for attending, and I hope you found something valuable from this.